But all that I'm saying is, like, from a shareholder perspective, your bet on Tesla is a bet on Elon's lifespan. That's what I'm saying. And we're
Well, I
seeing
guess
that
what I'm
more.
saying is if Elon's gone, even in a year or two, but he gets to like a milestone,
Now, you
the
see the
company is going
valuation
to be
cut in
worth
half at
so
least.
much more than it is today.
No, I disagree completely.
No?
No, I disagree completely.
Really?
How big is that correction? Who does it knock out? I don't think it's OpenAI. I think it's a lot of companies that aren't OpenAI, and OpenAI will take like some kind of valuation hit, but OpenAI will be fine, I think. Like OpenAI will spend on this infrastructure. These data centers will get built out, but I don't think they're the victims of the bubble primarily. I think it ends up being a lot of other people.
Damon, so if you were betting 1 to 2 years, if that's your horizon, do you think Burry's right that there's an AI bubble?
The challenge is, this is always in my challenge with Tesla, is how much of the value, quote unquote, of that company or any of his companies beyond SpaceX, in my opinion, evaporates if he's no longer around.
Hey, everybody. Welcome back to the Restart Pod. Shashi, last week you were saying NVIDIA to 10 trillion. Now a lot has happened to NVIDIA in the last couple of days. You want to take us through it?
Let's get into it. Okay, Michael Burry, who is famous for the Big Short movie, if you've seen that, he's an investor in a big hedge fund called Scion Asset Management, and he's famous for making controversial short bets and has been the most notable winner of a very big short bet. He made 2 substantial short bets this week. One is on Palantir, which is PLTR ticker. And the bet is for 5 million put options. So this is on the order of $900 million in a short bet, which is huge. This is just a humongous short bet. He must have a tremendous amount of conviction. The rationale that I saw was the very high PE multiple. It was on the order of almost 400 PE. At the time of the short bet, it's since come down. The second is that he placed a short bet on NVIDIA. NVIDIA is over 5 trillion in market cap, and the short was 1 million put options. So
you're very famously very pro both of those.
I'm very
stocks,
famously pro for NVIDIA. Yeah, so a $900 million bet against Palantir, which is one of my top 3 positions, and NVIDIA, which is also one of my top 3 positions. I'll give you my color, which is that valuations are high. There's no doubt about that. And so is there some room for these tech stocks to come down? Yes. And that's exactly what we've seen this week. Tech stocks have been coming down. And it's really the way I see that, the way I rationalize it, is it's giving back the last 1 to 2 weeks of growth. And if it continues on this trend, giving back the last 3 to 4 weeks of growth, it's not declining to where it was a year ago. It's still substantially higher there than it was a year ago. I still believe NVIDIA is going to 10 trillion. And my rationale for that is that if they were able to double their output, they would be able to utilize and sell every GPU. They would all be spoken for as quickly as they could be produced. And the only bottleneck step then would be how quickly they can get them deployed into data centers. But given that these GPUs have to be reserved so far in advance, I think they would have no problem selling every unit. So they're really supply constrained. They're not demand constrained.
Do you look at what happened with Burry as like, so you're very high conviction. Obviously, he's putting a lot of money on the opposite conviction. When you look at the investor layout land like this, do you look at his position as like completely misaligned with yours and you two just do not agree on the state of these companies? Or do you think like, oh, his short is a short-term thing that's adjusting for correction, but reasons to still be long on NVIDIA in the long term?
There are different kinds of investors. There are buy and hold for the long-term investors. My conviction and what I described to you is a very long-term horizon. What Burry, his style of investing is shorter term in horizon. These puts, they're going to cost him real money unless they pay back in a certain amount of time. So the time value of money hurts him much more than it does me. I'm willing to ride out ups and downs because I have conviction in the broader narrative. Jeff Bezos has this great quote that companies, the stock market in the short term is a voting machine, and in the long term is a weighing machine. And what you want to happen as a company builder is when your company gets weighed, you want it to weigh a lot. You want it to be heavy. What Michael Burry is doing is he's betting on the voting machine, not the weighing machine.
Do you see, I mean, like we've talked about Palantir a long time ago before we rebranded the podcast too. Do you, like, we're talking about NVIDIA here, but do you look at his Palantir position as like a little bit more aligned with the way you're looking at that company, or do you look at it as misaligned too?
I think Alex Karp has this great swagger that like it feels foolish to bet against. And I love his energy right now. And when a founder gets in that kind of flow, gets in that real deep flow, I'm not betting against him. And by the way, I think Elon is in the same kind of flow right now, and I'm not going to bet against Elon either. I think it's better to ride along with founders like that, the great founders who are in flow, rather than trying to price bet against them on trades.
So are you holding Tesla too?
I'm accumulating a Tesla position.
Okay, I see. No, I am. I'm watching. I mean, obviously, all of us have to kind of live on Twitter because of the tech sphere or whatever. But what's happening with the robotics at Tesla, like even just like the quality of like their hands on the robots is like super, super impressive. I don't know if I've made an observation like Elon and his like operating pattern as a thing that's changed off late, but like at least the way that the media is posting about stuff that Elon oversees, it's very, very impressive. Like the cadence of it's really, really like, holy shit. It's nuts. It's really, really nuts.
Yeah. Yeah. You are watching a master at work.
Damon, are you reacting to any of the NVIDIA Palantir affair of it all, the Burry of it all?
Yeah, I mean, it's things that I watch closely. I don't watch it as closely as I do the private markets, just given that kind of my day job, right, is the public. But especially for things like NVIDIA and Palantir, those things flow down, right? And so we get the ramifications of those independently. I think Shashi's largely correct in that, in his version of this short, Michael Burry's just kind of making a short to medium term vote. And even if the stock price dips momentarily or over the next year or so, there's still great opportunity for both these companies to go up. The reason I've personally stayed away from Palantir is just the PE ratio. I mean, it was 400 and more the last time I looked, which is just kind of an astonishing number. NVIDIA, for contrast, trades like in the 50s. So you're talking about something that's, 8x of NVIDIA's. And like, I think there's decent arguments that NVIDIA is kind of, if not the best company in the world right now, it's on the very short list of best companies in the world. I don't necessarily disagree either with Shashi's overall thesis that is NVIDIA is completely supply constrained right now. That is absolutely true. The question I have is how long that persists, and if you get other dominant players. Normally, when there's this much demand in a market that is supply constrained by a single provider, there are other entities, i.e. AMD, Intel, other private companies that are looking to take advantage of this pent-up demand that will begin to play. And the question is, can NVIDIA sustain the dominant lead they have, or do they just continue to grow, but at kind of reduced rates, right? The rate of change slows, so to speak. I don't know that I have a formal opinion on that. Those are the things that I kind of think about is, the other thing that I weigh as when I'm trying to think about my own public market investing is how much of the ETF positions that I have are already kind of riding the wave that is NVIDIA, as an example. Like if you own kind of an ETF in the S&P or NASDAQ or whatever, the Dow, any of those things, you have a lot of exposure to NVIDIA. And so like in my single stock picking efforts, I try to do things that are contrarian and correct, because those tend to be larger swings, both in the positive and negative direction. So like I do kind of a steady diet of ETFs and these kind of diversified, portfolio style investing, whereas in my single stocks, I will try to look for something that is against the grain or something that is on a trend that is lagging. So kind of AI is here, so to speak. Robotics are kind of here. And so like the question in my mind is always what's next, kind of second order effects of these emerging things.
But Damon, so if you were betting 1 to 2 years, if that's your horizon, do you think Burry's right that there's an AI bubble?
I think if I was forced to make a binary selection, I would say no. But there's growing momentum for everything that we're seeing, that the valuations have simply risen to a level that can't be sustained under any imaginable, time frame, I guess. Meaning like, we've seen talks in this most recent week of Sam Altman kind of being pressed on the revenue for capital commitments question. The same is kind of true of these other various AI companies, depending on what you're going to look like. And a lot of the demand that we're talking about for NVIDIA bakes in these capital expenditures from these AI companies. And I think things like Google, Meta, Apple, Microsoft, these companies, Amazon, these companies have the cash to spend, but the OpenAIs, the Anthropics of the world, we're still kind of waiting to see if they're going to have the cash on hand ready to supply these chips. So I don't know. I mean, I think you're going to find reasonable people making either bet. I haven't spent a lot of time building conviction on one way or the other. I'm not. Yeah, I don't know that I have super high conviction that, ask me 2 years from now if the valuation of these AI companies are going to be more or less than they are now. In 10 years, I have very high conviction they'll be higher. But in 2 years, I feel more of an unknown.
Lakshya, is there an AI bubble? Is there an AI bubble, Lakshya?
I think I'd say yes, but I think especially watching all these interviews of Sam Altman and everything, like so much of it is predicated on like this like weird circular loop of like we will find the revenue once we have the infrastructure of which will be supplied by the revenue. And kind of this like topic of like you just mentioned this like founder flow state. Like Sam Altman kind of strikes me as a sort of person that can just kind of get the things that he wants, like said one way or another. That like
Sam Altman.
Yeah, Jesus.
Doesn't he give you SBF vibes? Like the guy has something off.
He has pretty distrustful vibes, but I also think he has enough like he has so much capitalistic momentum behind him and can procure capital to the things he wants to do relatively high. Like he has that agency a lot more than a lot of other people do in the AI space. Like Anthropic CEO, a lot of these people in the OpenAI like ecosystem who then went and started their own companies. Like I don't look at them as having as much leverage as Sam Altman does. It's just
as much riz.
Plain thing. Yeah, I guess so. As much riz. I think it's just this like I kind of distrust him implicitly. Yeah, like I look at his like interviews and I don't trust him a lot.
Yes,
but I also look at the things he says and it's like he has enough power to kind of make those things happen in a way.
Yeah,
and so I do think there's a correction coming. How big is that correction? Who does it knock out? I don't think it's OpenAI. I think it's a lot of companies that aren't OpenAI, and OpenAI will take like some kind of valuation hit, but OpenAI will be fine. I think like OpenAI will spend on this infrastructure. These data centers will get built out, but I don't think they're the victims of the bubble primarily. I think it ends up being a lot of other people.
My bet is that OpenAI doesn't exist as a standalone company in 5 years. I think they're going to be incorporated for parts as Microsoft. Microsoft already has such a big stake in them that when they run into real financial trouble, the one lifeline they have is to fold into Microsoft in some way that preserves their reputation and optics and all that. But for functional purposes, they're going to be a Microsoft vassal state. And my bet is that open source makes a big resurgence. I think Meta has an opportunity to be a really dominant player in this open source landscape of models. And I don't think the frontier models are different enough and good enough to gain separation from each other in the short term. And I think therefore the open source will have a chance to be almost as good, but free or something approximating free. Whereas the for-profit models, including OpenAI, are going to just be super expensive.
Yeah, I mean, I look at it as like, I think OpenAI's path to profit, that's super speculative to me. Like, I think it's very, very speculative to me. It's just the sort of thing that like, in looking at, compared to like maybe like even just a couple of weeks ago, like the conversation on Twitter from OpenAI and Sam has been a lot more like open, do with that what you will, like open being a term with quotes around it. There's just been more communication about how he's thinking about things. And a lot of that conversation about like all this infrastructure spend and where we anticipate our revenue comes from feels a little hand wavy, but it's also at the same time, like we kind of talked about this last time, right? The secondary markets are making a lot of money and we're just seeing the beginning of robotics, hardware changes, all that kind of stuff that I could realistically foresee. Yes, OpenAI is kind of a subcategory of Microsoft. Like maybe a little bit of a government bailout happens, maybe a little bit of like Oracle bailing them out happens, but like inevitably, like
did you see that he asked Congress? He asked Congress for a backstop, a financial backstop, while also wanting to spend $1.4 trillion or something. It's just ridiculous.
Like it's the sort of thing that like I think Sam's vision for things will happen. The path to what that means for OpenAI's business, I think will have a lot of correction to it. But what OpenAI wants to see happen in the world will happen, kind of thing. That's my overall perspective on it. And again, that's super speculative. And I think the business of it all is like the most fragile part of it. And ultimately it has to survive as a business. But like the way that things seem to be going presently is that like this infrastructure spend is going to happen. It's like secondary market copying and pasting of products that are making money will continue to happen. OpenAI has like the biggest distribution leverage in the world right now. If someone finds revenue, OpenAI can capture it. Do I think OpenAI's valuation is justified as it currently stands, like 500 billion? No, I don't think so. But do I think the way they want the world to work will happen? Yeah.
Have you seen the charts of market share? OpenAI has lost a lot of market share in the last year, and Anthropic has been the biggest gainer in that market share. I'll find the chart and share it.
Yeah, share with me. Out of curiosity, do you know like what user cohorts or just generally? Because there's like models.
This is aggregate demand.
Okay. Interesting.
I think they do that via token count. I think Lakshya is how it's quantified.
Okay.
So it includes both front end and APIs, which is where Anthropic is starting to strip out, OpenAI, right? There's just more developers that are turning to the Anthropic APIs, which we've kind of, we've been on that boat for a while. The thing I find interesting, so I actually firmly agree, Lakshya, like Sam's vision of the world is at least one that is parroted by anybody with firsthand exposure to these AI systems. You won't find anybody working in AI that fundamentally opposes the belief that it's going to happen. There's some debate around what form it takes and who's going to be market leaders, but everybody seems to be in consensus that it's going to happen. Maybe not, but that's just kind of the reality. I think Elon and Sam are an interesting juxtaposition because I get the same general kind of vibe check that you guys are alluding to. That is, Sam is inherently less trustworthy in some ways than Elon Musk. I just find that fundamentally at odds with the track record, which is something I haven't really been able to square with myself yet. Like for some reason,
as far as like shipping product or something else.
Yeah, just like on product timing announcements, Sam is batting near 1,000, right? As far as like we are going to ship X on Y date, and then X comes out near Y date with some obvious, wiggle room for months or whatever. Whereas like the Tesla Roadster is not a thing, and maybe now it is a flying car also. And so like somehow, that you guys are making faces like you haven't heard that yet. Yeah, that happened. So anyway, the point that I'm making is not really that I believe or don't believe either of them. It's just that their public personas seems to be almost the antithesis of their track record, which I find interesting. Again, not really actionable, just interesting in its own right.
Maybe do we want to talk about, on the topic of operators with funny public records, the good old Cluey Kid?
Yeah, go for it.
Yeah.
Are you both like pretty like caught up on like what's been happening?
No, let's summarize.
Okay. So Cluey is a startup. It's this kid who got kicked out of Columbia for making like a tech interview cheating software that like, if I'm on an interview with y'all, it puts an overlay over my screen that can like give me the answers to the little like coding puzzles that I have to do during an interview. Goes hyper viral, like blows up, makes like $1 million revenue in like 40 something days, like $1 million recurring revenue. Spins that off into a company called Cluey, called Cheat on Anything. Like the slogan is Cheat on Anything. Same premise being, we're going to take these little like blurbs, we're going to show you like cheat codes basically as you're on calls with people, whatever. Super rebellious, like this kid like has a super like degenerate, like very Gen Z, like upstart attitude to a lot of things. And on social media, his whole company has this like brand of like, it's basically like if the Duolingo bird was like crass and like very, very like uncomfortable to watch. Like it's very TikTok friendly. They go viral all the time. They have like a lot of social media growth. But what's been happening off late in the tech sphere is posts have been coming up about this Cluey Kid saying like, hey, they kind of like degened their website. Instead of like Cluey on everything, it's like Cluey, AI note taker, very professional, thumbs up. Everything's like very like nice and trustworthy. This kid does a TechCrunch interview where he kind of gets like pestered for like revenue numbers and user numbers. And he's like super guarded, which is like pretty unusual for him. And like super like standoffish almost, and very like, oh, like tech Twitter doesn't get it. And it's like, all in all, very interesting. Tech Twitter either loved him or hated him. He's a very divisive person. Mind you, he's like 22 or something. Like he's very young. And like his whole thing is distribution is king. You want to go viral all the time, go viral, nothing else. And people are on two sides of the coin where either like, okay, you're wrong. Like clearly your product sucks and people don't like your product. Your distribution isn't doing anything. On the other side, there are people who are distribution is everything. You should only be focusing distribution. Please going to win. Y'all just don't get it.
My summary of this is very quick. It's both. You have to have attention, otherwise you don't get a chance. But ultimately, you have to deliver a product that actually fills a need for people. Otherwise, eventually they tune you out. And Cluey and Roy specifically, and everything I know about them, do really well at capturing attention. Now we can debate whether they do it the right way or the wrong way, or if those two things are even real concepts. But the fact of the matter is, they are able to generate eyeballs onto things in ways that feel differentiated and unique, or at least they can do it to a scale that others have a hard time matching. And so what that buys them is an opportunity to make something people like. They haven't done that yet, best I can tell. And the AI note-taking app just feels like where everybody pivots into, because naturally we're sitting on Zoom meetings all day long and everybody is taking notes with some sort of AI companion. And so it feels like a reasonable place to start. They'll probably end up pivoting out of it. But I do generally wonder if they just simply are in a discovery phase of, they have a lot of attention. They're failing in public. Like, that's part of the downside of going hyperviral very early before you actually have anything figured out. But they have money, they have time, and they have attention, and that will give them opportunities to succeed. And so I wouldn't bet against them at this stage. That said, they haven't figured it out. They haven't figured out anything yet. But the nature of the world is that if you can capture attention, then you have a chance. And sometimes it doesn't even matter if you're right or wrong. You just enough, at bats in the baseball metaphor, and eventually you get a hit.
Before I give my take,
you guys are too
reaction.
You guys are too young to know the story of Napster. But there was this app called Napster,
the social network movie.
In the social network. Yeah. So there was this MP3 pirating app called Napster, and it was super popular. Everybody used it. It was definitely illegal. I mean, everyone openly knew they were cheating, just like this Cluey thing, and yet it was super convenient. It was just like way lower friction to download the song you liked rather than go to the store and buy the disc or whatever, or like buy the $16 album on Apple Music. Like it was just so much more convenient than that. And everyone knew, like, if I'm buying a whole album, like, I only really want one song. Why do I have to pay for the whole stupid album? But this was in the legacy frame where you bought the whole disc if you wanted the music. And so Napster really took off in this short burst of time. And it reminds me a lot of this Cluey story of kind of this taking off from the ground, this irreverent punk almost attitude toward the establishment. And what ultimately happened with Napster is that they got shut down after like 2 or 3 years for copyright violation. It took the government a while, even though everyone knew what was happening and that it was illegal. It took the government a while to shut them down, but they did. One of the two founders of Napster was a guy named Sean Parker, who went on to invest in another music app called Spotify, and has made a good fortune for himself. So maybe this isn't the end of the story for this irreverent Cluey founder.
I think like I'm kind of aligned with Damon, a little bit more sympathetic, I think, than I think a lot of Twitter is, where I very hard like agree that like if I had to choose between like a product that like I know is perfect or like media attention that I can just like point anywhere, like I think the media attention is always better as a founder a little bit, because like if all you're trying to do is like you want more opportunity surface area and you want the opportunity surface area to grow, right? As long as your runway is not like cutting you short or not like on like death's door or something, opportunity is always abusable, right? Attention can always be pointed somewhere. Right now, I think they just have a problem that like their product identity and their attention identity are too divergent, right? I think taking what their product is and the fact that they debranded it to like AI meeting note taker was like a huge error. I probably expect that like they will probably flip back to cheating on everything because that brand will resonate with a certain generation of people. They should be like trying to like take the media, which is like this, like they have this like Fox outfit thing that like gets dumped and goes on dates or whatever. Like the people who are watching that are not the same people downloading like AI meeting note taker, right? The top of funnel is like very correct for like high school, college, maybe even younger than high school. And if you focus on the cheat on everything kind of brand and just like leans that super heavy, like stay rebellious, stay super uncomfortable for most people, you stay in the vernacular. Yeah. Conversion might be hard, but at least if you're getting like some level of revenue and you can show that your attention is growing, like you are always fundable, you always have more time to turn the lights on. Whereas if you make a thing and no one cares about it, you're effectively dead anyway.
Yeah. There's a billion meeting note takers anyway. There's no competitive advantage there.
It's just like, it's the sort of thing that, I mean, like they started off and like Notion, Google Meet, like Otter, everyone's adding a meeting note taker. Like, you're not going to win a fight against these companies that already have contracts with like major firms that are easier to sign than like, I'm this upstart kid who like visibly like swears at people on TechCrunch interviews and gets laughed at for things, you know, like it's just not like a winning game, you know? So I think they'll figure it out. Like, I'm sympathetic to the idea of like brand first generally. I think it's just like it's funny watching them flail a little bit in public and seeing tech Twitter be so like, I don't get it. We think this kid's hyper dumb, but what can you do? Switching gears, Google, Apple. There's a very famous bit of news this week that Apple is going to be paying Google to use Gemini in replacement for Siri, which is a gigantic white flag waving from Apple that has historically been fumbling the ball in regards to AI stuff. Siri has sucked for the longest time. We should have had a really good Siri a long, long time ago. Alas, we have not. Damon, I know you're plugged into the story. You want to give like a little debrief on it?
Yeah, I mean, you did a nice job of summarizing it. Basically, there's reported numbers that the contract isn't finalized, but somewhere in the neighborhood of $1 billion per year, Apple is going to pay Google in order to have their Gemini models power the on-device assistants for Apple. Right now, that's named Siri. Who knows what form that will take, kind of in the near term. But basically, that's the short version of it. I think there's a couple interesting threads to pull on in this story. Number one, this is kind of the inverse relationship we've seen with Google paying Apple to be the default search engine in Safari, right? Google Search is the default search provider inside of Apple Safari, whether that's on Mac or iPhone or whatever. So I think in some ways, this is just back to our circular finance discussion. This is just Google pays Apple $1 billion to run search. Apple pays Google $1 billion to run Siri, and then back and forth the circle goes. So in some ways, maybe a little bit of a nothing burger. I do think that this is in some ways evidence to the folks that think data is kind of the most important in the AI world. And what I mean by that is one of Apple's fundamental core value propositions for the last decade plus has been this idea of privacy, or at least privacy relative to other device and internet service providers, whether that be the actual internet service providers or the Googles of the world who are providing search and YouTube and other things. And you can't do good AI if you don't know the most about people. And the challenge that Apple has is they don't know the most about the iPhone user, because a lot of the things that are happening on the iPhone, they're locked out of, again, by their own choices to date. But maybe that was a mistake given the world of AI. Now, I think you have a lot of people buying the iPhone for privacy. I also think you have a lot of people that would use the iPhone independent of that privacy layer in any way. But I do think that this is, to your point, Lakshya, kind of an admission that they're just not going to be great at AI, and they're probably just okay with that. They're kind of an optimization company. They run hardware. They've taken these big swings. I don't think AI is necessarily going to be a significant part of their roadmap. I think they're probably already looking into whatever they think is going to be next and how they leverage their ubiquity in just the devices. Think about like on-prem AI probably as being kind of the area that they'll win in, the vector that they'll win in, and they just don't think they need to be the foundational model providers. I think this also kind of as a last statement here, it might be an acknowledgement from Apple that they actually don't think winning the foundation model race is a race worth winning. Now, they might be proven wrong there, but they simply might be saying that taking a buy versus build approach here is better because the money it would cost to be competitive, to Shashi's earlier point, maybe open source wins, maybe OpenAI wins, maybe Google wins, who knows? But the point is they don't necessarily think that's a game that's going to have a big enough prize to win. I would personally disagree with that choice, but that seems to be the one that they're making.
Interesting. I hadn't thought about it that way. I feel like the place I end up is like the pitch for Apple's vision about how AI would work in their ecosystem made a lot of sense to me. Like, they own the hardware layer. They're a gigantic company. They have like the room to say, like, their original pitch, like maybe a year ago for like Apple Intelligence, was like, there'd be many stages of AI servers that work for you, right? One's your phone's local compute layer. One is like your virtual private cloud that has its own AI system in it. And last is the Apple secured layer. That's how it keeps the privacy with you. And it made a lot of sense to me that like Apple said one way or another, like, is the leader in devices on people that do things. Like they're the innovators and they set the like leading edge in that. And there's so many people trying to play in this space. Like, oh, we're going to do this peripheral. We're going to make a ring or a new headphone or something, right? The fact that you cannot simply move Apple because people just like their AirPods, they like their Apple Watch. Those things grow very naturally and just copy moves from what has kind of worked, makes it very, very impossible to push them. And it's hard for me to imagine, like, rather it like, not hard for me to imagine. It's a little bit sad to me that like that pitch for like how embedded AI works on this device ecosystem is going away in service of whatever. We'll just let Gemini run off with it.
I don't know for the record if it is though, right? I mean, like, okay. I don't know that we know, meaning like I still fundamentally view kind of the layered tech stack that you described, the layered kind of security stack you described as being the same. They're just going to run Gemini models in each of those layers versus, having their own internal model powering that intelligence layer. I could be wrong there, but that's just my understanding.
Yeah, maybe. I think, like even then though, like people talk about this like personalized AI thing, they'll like understand and tune to you, whatever. Like that goes away in a universe that the model is provided by a third party, right?
Yep.
Like the innovation that you could possibly get out of like my virtual private cloud agent knows this much about me.
Yes,
is suddenly very different if it's Gemini as a service provider and like providing an API call, right?
Yeah, there fundamentally is know everything about you and privacy at the same time. Those are
And you might be right. I mean, for all I know, like maybe they'll find an integration and like a service agreement with Gemini that allows a lot of that personalization. Maybe the wearables are still able to run as fast with Gemini's models under the hood, but at least like the way it projects to me is very much appealing back on like the AI layer could have done this much if Apple owned it entirely. Now it will do a little bit more like this in even the most perfect future kind of thing.
I wonder, when I use my phone, I'm just thinking through like, what are the things that a really great Siri would improve? How would it make my life better or easier by using my device? And it doesn't really change that much, I guess. I don't know that for an Apple use case, at least for me as a user, if I'm watching a video on YouTube or I'm playing chess on my phone, like I don't know what Siri would do, with that. And if it's an email, if it's writing an email, I've tried voice writing and I just need to visually, like I need to write a little bit, delete, write a little bit, refactor, write a little bit, and just doing it by voice, I don't think is sufficient. I just want to add a layer to this, which so Elon in an interview talked about the future of phones, and he talked about the 5 years from now he sees phones as the AI edge node. His vision is that we will think of apps as archaic as like cranking an engine to turn on, and that potential future Tesla phone, he didn't say explicitly this, but sort of alluded to a potential future Tesla phone would really have no apps. It would just be an AI assistant that you could use as a screen, as a camera, and otherwise just a partner to talk to that would anticipate what you need. So instead of opening a weather app to find out the weather, it would just tell you the weather when it thought you knew when it thought you wanted to know the weather.
I mean, I have a couple so like this idea of what the evolved hardware looks like when we have like a small local model, or even it doesn't have to be local, but when an AI agent is like core to the infrastructure rather than like a traditional operating system with a GUI, basically. It seems like a lot of the direction generally becomes like, I want a microphone, I want a speaker, I want a camera, I want it to connect to my headphones generally. Like that's like the base set of requirements. OpenAI and their like partnership with Johnny Ive seems to be pointing in that general direction. They haven't figured it out. Like I think anyone who plays in the hardware space thinks along this vein. The way I kind of look at it is like what ends up actually being quote unquote valuable, especially is that like in reaction to what you just said, I don't envision that future is very far away with an Apple Watch and AirPods. Like if there's any like very linear path to like a device setup that can get closer to that, like yeah, you're missing a camera, yeah, like phones stay in pocket forever, but like if I want to, for example, I have a 14-hour drive from San Francisco to Portland, where I'm from. All the time I think about, man, it'd be cool if I could like do proper work while driving. It'd be nice if I could like verbally do work, my work being writing code while driving, right? With Cursor, all I already do is I just prompt, right? Like I need to be able to see the outputs of what Cursor is doing and like validate it for me. But for the most part, I'm just kind of like a little bit autopiloting Cursor, and that just needs me generating text in reaction to text shown to me, right? If a vocal model is good enough and has a speaker, has a microphone, has some sort of simple interface which I can interact with to see outputs, like that is enough for me to progress towards that device future, I imagine. And Apple's still in a really good position to be there first, if that makes sense, right? If I wanted like Cursor, not even necessarily as an app, but like as a interactable API that an agent hits, Apple is in the position to do that. Will they get there fast enough? Will some other company come up with hardware that actually ends up beating them to that future? Maybe. I mean, Apple's kind of slowish. But there are universes, I think, like some of the stuff that happens in San Francisco as a city, there are a lot of people who are playing with like, I want to make like a vocal ring or something that I can give an input to. There are people working with like plugging a device into my iPhone that effectively like jailbreaks and allows me to like verbally command the phone screen of it all, right? Those sort of innovations and like little tech pieces that people are making, I don't think most of those companies survive, but I think the ethos behind a lot of those companies ends up hopefully in a very traditional Apple product that still might look like a phone first.
I don't think the screen's going away. Humans crave too much visual inbound for the screen to really go away. Like even if voice becomes the dominant interface between which we're prompting the various devices, I still think you're going to be like, show me this YouTube video. And I'll just be telling it instead of scrolling with my fingers or whatever. Yeah. The non-app world is interesting, but I think what that really means is just the interface is not selecting the app. It's just choosing it under a hidden layer. Because you're still going to have YouTube versus, the weather app. Like, it's still going to be a thing. You're going to, call them web pages or whatever. It's still going to be very distinct visual displays. Because, like, I don't want, my weather running into my stock market app, right? Or my news app or whatever. Like, I don't want them all in the same place. I want them in, predictable places. So I know where to get them. I think the other thing that I haven't thought about. Go ahead.
I was just going to say, like, the only thing I imagine first that happens, like, people still work on laptops. People still get work done on laptops. I think the thing that's most likely to happen soonest in the hardware space is there are innovations that happen in the human-computer interfaces that allow us to kill the keyboard and the mouse. Like, I think there will be some collection of devices that are made or just common interface points that say my iPad or my iPhone can become a primary productivity surface rather than like secondary to a laptop. I think I didn't know this, but the original design, like the original intention of the Apple Watch was to be a productivity tool, not a health tool. It's just that they found more users using it for health purposes that went down that lane. And it feels to me like there's just a resurgence right now with vocal AI allowing people to question why we need a mouse, why we need a keyboard to get majority of our work done.
I think there are also a lot of occupations that are away from the keyboard in which a version of like a wearable or a watch or something like that make a lot of sense. So like think about teacher when you're like in front of a bunch of students all day long, right? You're not primarily interacting with a keyboard, but you're interacting with things in the real world and you want engagement, you want visual feedback or something like that. I think that makes a lot of sense. I think that might be a place where Meta Ray-Bans, as an example, could be, the visual display for feedback of the things observed by the cameras on the thing. Think about things like firefighters or waitresses and waiters in restaurants, chefs, when they're looking for, and the next ingredient to put in there, whatever they're making their pasta, right? I think there's a lot of things in which we've historically not been able to deliver software-like features to the real world. That to me feels like the next bridge that gets crossed.
Yeah, for just like pure interest, back when we were doing Scholar, I had 2 test papers for like, please read this paper, make sure the AI thing is doing well. One of them was always like VR robotic surgery, where like I know in reaction to the Meta Ray-Bans, like I have seen doctors commenting like the Ray-Bans have gotten so good, like so good. I'm generally not like, I'm not overall bullish on glasses being like, this is going to wipe the phone out. Like I think there'll be niche lay people who end up keeping the glasses, but I think there'll be very strong use cases for certain categories of work where it's like, it'll kind of be expected that you're able to use the glasses as a part of your like tool set. Like surgery seems super common, firefighting, all that kind of stuff. Construction's
the one that we've seen the most people trying to build for. So it's you can see in real time, you can mitigate dangers as they come up, right? It's workplace compliance down some lanes. It's that kind of thing. It's anything in which you're like doing real world physical trade style stuff where you're moving, physical items from one place to the other, in which there are, in my opinion, there's a missing software layer that could be really additive if done correctly.
All right, change gears here. Elon got $1 trillion pay package from Tesla. The details are as follows. The main goal that the company has to reach is $8.5 trillion in valuation by 2035. So if he achieves that, this is what's called the Mars shot goal. So other than not moonshot, but the Mars shot. I'd love your reaction to this. Do you think this is a great incentive for a great founder? Is this too much money for the wealthy and a signal that communism is coming from the uprising of the jealous? And just related to this, the biggest driver of valuation in his mind is Optimus. He says it's going to be the greatest product ever created, and he said it will perform the kinds of surgeries that human doctors couldn't perform. It has a kind of dexterity that is far superior. He calls superhuman. He says that we're all going to want our own personal robots to do things for us all the time. And he described several scenarios. For example, he said, if someone commits a crime, one of the potential alternatives to jail might be that you have a robot follow them around and stop them physically from committing another crime. So it sounds super interesting, this potential future. They're teed up to make many millions of these robots. It's a super fascinating time to evaluate Tesla as a stock. Would love your reaction to this $1 trillion pay package.
I think it's interesting. To begin with, it's interesting. I think the thing I look at with like these pay packages is Elon's a good operator. Like, I don't think anyone's going to deny that. It is really interesting to me that for a valuation, like the reward, such a significant chunk of that valuation, like percentage wise, ends up going to one person when like this affair, like the sort of thing that would drive that much of a valuation growth, has to be like a gigantic effort spread across that many people. I'm not opposed to like rewarding capitalistic effort that drives business growth. Like, I think that's a appropriate thing to do. It is crazy to me that all of that's being funneled into one person. I think it should at least, like, I don't know what the nature of that package is. I haven't looked into like if there are any details about like, is it equity, how much of it is cash, like deferred, whatever, blah, blah, blah. But like, it would make sense to me that like Tesla as an organization will have to grow a lot. We'll need like a lot of really quality leaders. And the fact that like so much of that percentage of that valuation ends up being rewarded to one person feels like the biggest to me.
Why doesn't every company do this, Lakshya? Because if this succeeds, everyone with stock options has more valuable stock. You don't know about this because Nike stock has gone down. So this would be the way it's supposed to work. The way that stock options are supposed to work is that you get stock options and then the stock goes up. So in that model, everyone who is part of the company does get more value because the stock goes up in price. And with Tesla's current valuation at, let's call it $1.5 trillion, a $7 trillion increase in company value gives the person who orchestrates it $1 trillion, 1/7 of that value. Seems very fair to me, because if somebody else could do that for less, you would hire them instead. The only problem is that there's no other human that could do that for Tesla but Elon. But that's not the case in every company. In other companies, there may be a scenario where a Jamie Dimon could multiply the value of JP Morgan by 10x. And why not give him a 15% of that value increase? Because all the boats are rising with the rising tide.
Yeah, as a fraction, that 1 trillion, assuming roughly 8 trillion in valuation, is only about 12%. I mean, it sounds silly saying only with those big of numbers, but that's just kind of the truth. Like, compensation around 12% of a market cap for a CEO isn't necessarily out of step. The thing that this signals, though, is, to Shashi's point, it's asymmetric risk, which is the challenge. And that, like, a bet on Tesla is fundamentally a bet on the sustained incredibleness of Elon. So if you're willing to take that ride, that makes a lot of sense. The challenge is, this is always in my challenge with Tesla, is how much of the value, quote unquote, of that company or any of his companies beyond SpaceX, in my opinion, evaporates if he's no longer around. Like, Elon is the kind of classic, I think, paragon example of, if this CEO gets hit by a bus, the company's valuation goes to zero tomorrow. I don't know anybody that would be a buyer of Tesla at its current valuation, or even half of it, without Elon Musk at the helm of that. And in some way, that's a testament to Elon Musk's greatness, so it shouldn't be overlooked that way. But it is incredible asymmetric risk to bet on a company going that far into the future with a full tenth or so of its valuation tethered to one individual. And I don't even mean competence. I just mean literal survival. You are basically making $1 trillion bet on a single human living that long, which is just a massive amount of kind of effective value risk if you just
David, I'm just curious, like, so I'm with you. So let's just play out the scenario. So let's say the special sauce of Elon gets the Optimus. Let's just talk about Optimus because that's the real business here. Gets the Optimus over the next 2 years to 1 million units deployed. Does that give you enough confidence that whatever tranche, so I think this is broken up into like 12 tranches or something, but let's just say he gets like, one tranche of that and they get 1 million units, and for whatever reason, Elon is no longer in the picture. Isn't that still super duper worth it for the shareholders?
Yes. But all that I'm saying is, like, from a shareholder perspective, your bet on Tesla is a bet on Elon's lifespan. That's what I'm saying. And we're seeing
I guess
that
what I'm saying is if Elon's gone, even in a year or two, but he gets to like a milestone,
no, you
the
see the
company is
valuation
going to be
cut in
worth
half
so
at least.
much more than it is today.
I disagree completely.
No?
No, I disagree completely. Because
Really?
the PE and the fundamental value of the business as it would stand would be worth far less than Tesla present day. So like all of Tesla's current value basically is built into the future, right? If you were just valuing Tesla as a car company, which we all agree it's not, but if you were just valuing it on the current business it is today, it trades at about 100 times more than its counterparts in the industries, right? Like BMW, Mercedes, Volkswagen, which is like a large group. So all that valuation fluff is just an Elon effect, right? It's just where this thing is going because Elon's going to continue to push it. So regardless of whether he gets any of these tranches in this newest pay package, and again, to be very clear, I'm not arguing he shouldn't get the pay package. What I'm arguing is if you're betting on Tesla, you are betting on Elon Musk continuing to be at the company, whether that means he is there professionally or whether it means he is alive. And that's what I'm saying is that this is the most founder-centric bet of all time. That's neither a value judgment of good nor bad. It's just a statement of fact that says the only reason this company is valued at what it's valued at presently and in the future is because of Elon Musk. That's all I'm saying. Like Shashi, what price would you pay for Tesla currently if Elon Musk stepped away tomorrow?
I'd definitely pay less than shares are trading at 436 right now as of recording. If Elon stepped away tomorrow, they have such a talented team that I don't think it goes to like 10% of its current value. So it's currently at 1.4 trillion, let's call it. I would pay happily at 1 trillion because of what their upcoming product lineup is. Let's just say Elon is a 50% lever. If with Elon, they produce 50% faster and more units, and without Elon, they produce 50% less, but they still have a lot of smart people and kind of lots of ingrained culture around robotics and efficiency. And so they do 500,000 robots instead of 1 million. That's still hugely, profoundly important and valuable, and it is worth something like $1 trillion today's price.
I understand the argument. I disagree with the magnitude, I think. Like, I think that a lot of the belief in the current company has nothing to do with the intrinsic value or expertise in the business. I think you would see public sentiment evaporate the second
it's a
Elon
team
Musk
bet,
wasn't
right?
there.
This is a classic like venture style team bet. You're betting the team that's not Elon can pull this off.
Yeah, but in a public market, what you're actually betting is on public perception, right? Unless you think you would be fine with tanking for a decade and then rebounding.
But I'm not betting on the voting machine because I'm not a short-term investor. So I'm betting that over the whatever longer period of time, that team would figure it out. They'd deploy enough units and robots would become real because of that team.
I think the way I look at it is like Elon historically has very much been his own kingmaker. Since the beginning, he's been his own kingmaker, right? Like almost like kind of bookending the conversation, similar to Sam Altman. Like, the way he views the world and the way he wants the world to like organize around him does kind of happen. And I think like I align not all the way with Damon, but the arguments that Damon is generally making is like, in my perception, a little bit more understandable, where it's like, it's so firmly on Elon to make this company work. And I think the $1 trillion pay package, like I can make some kind of justification for like a big reward on valuation. That's like, I think it makes sense to be a little bit lower. But then like, even hearing you talk about Shashi, like you just kind of said the whole thing about like, it's a bet on team where like that $1 trillion pay package is so focused on that one person, right? Whereas like part of the bet you're making is like the team would then figure out even if Elon weren't there. Like there's like a little bit of like a,
well, I don't know. We don't know, right? Like we don't know what pay packages the rest of the team are getting. So
yeah, for sure.
Yeah.
It's just interesting. It's obviously very, very different. Like I think the world of founders feels very different right now, just because there's so much fervor in the AI cycle, and like it seems like robotics is going to activate sooner than people expected.
Yeah,
like a lot sooner than people expected.
Yeah.
And that's introducing a whole nother ball game to the AI conversation that like we're still so early to. I mean, like there are people in the States who still don't know what ChatGPT is, right? And we're having a conversation amongst the three of us about like we can have robots that will like take the chandelier off my roof or something and replace it with something else, right? Like we're so early, and I think that like we're still in such early stages where it's almost like early stage investing where it's like so personality driven. It's just that in this case the personalities are already gigantic people who like have economies surrounding them, basically. That makes the world a little bit more unusual than before.
I have a business idea for you, Lakshya. I'm not going to do it, so you're welcome to take it.
Okay, sure.
If there are going to be 1 million Optimus robots, people aren't going to want them to all look the same. It's sort of like the iPhone. People are going to want skins on their robots. And you could make all kinds of skins that people could just slip onto their Optimus robots.
I'm gonna stop you right there. I know the path that business goes down really quickly, and I do not want to talk about it on YouTube.
I was gonna say we
cannot talk about it on YouTube.
Also,
for a different video platform.
Also, isn't skins for robots just clothes?
Again, I think we saved that one.
I don't think any of us are working on this business.
That will be after we say cut. We'll talk about that one after we stop recording.
Pod. We stop recording and we can keep talking about this.
But I'm not joking. Someone is going to make a lot of money on this.
Yeah, doing a very certain type of thing with the robot.
Hey, but is it any less moral than Cluey? I mean, come on. You just gave Cluey a bunch of flowers. You just gave Cluey their flowers for their cheating app. Is this really worse than that?
I think we can discuss my morality and my lines on the next episode.
All right, sounds good.
We'll probably put the next one. Thank you all for watching. We'll catch you all next week. See ya.